Good to go. And welcome now back to Vishal and Company. Maddie is not able to make it today because she's feeling a little ill. So we're going to let her take a break. Bringing on Joseph as your visual candy for today. Our man in the crypto space, Joseph Morton. We got Vishal Tura and also Taco Indicena doing the grand scope of things. And me just being the cranky old man in the back going, what the hell's going on with this world? Everything's screwed up. So today we're going to talk about, I guess, the return, if it could be termed as that, of Bitcoin and how it seemed to find some sort of footing, or has it? And then also we're going to discuss the Fed, not the Fed, we're always talking about the Fed, about how Biden may actually have an infrastructure deal. We'll see just how well it gets through, whether it turns into a really watered down piece of legislation or actually makes it through in its robust form. So take it away, Vishal.
All right, thanks, Galen. So let's start with the equity markets just very quickly here. It's been just one of those weeks. We're approaching the end of quarter two, which is actually next week. And also next week, we also have Canada Day and heading into Independence Day in the States. So it is going to be time. We are going to see some rebalancing. I believe the Russell 2000 is actually going to rebalance. So we might see stocks like AMC, GME, a lot of the meme stocks, right, will get involved there. And maybe that's actually a discussion for next week. But in terms of the equity markets, new highs, S&P 500, look at that, new highs on the S&P 500. We did hit new highs, record highs again on the NASDAQ. The Dow Jones, though, has not yet joined the party, maybe next week. And, we'll probably discuss this when it comes to the infrastructure aspect. And the small caps is also still hanging on, not making new record highs yet, but we are seeing that specifically on the S&P and the NASDAQ. The tech is, falling down here just a little bit. So it's been one of those weeks where things are moving, but it's just been sort of boring in terms of news-wise and big events. It's just like, okay, things are going, and it's sort of reminds me of like the whole China trade deal time, when the market was waiting for a single word about the China trade deal. And this time it looks like it's inflation. And we got this data out actually just today. Key inflation indicator posts biggest year over year gain in nearly 3 decades. So we got the biggest increase since 1992. And that was the May core personal consumption expenditures price index. And as you can see, an important inflation gauge for policymakers. And the big story again, 30 years, fastest increase since the early 1990s. But again, the Fed is saying, don't worry, this is just transitory, right? And that's the narrative that they've been saying. And now it's this game here is the market calling the Fed's bluff, right? That's what a lot of people are talking about, because these markets continue to move higher. Even when Fed presidents have come out saying, hey, we might have to hike rates because of this inflation, but then is this inflation even real? And that's what the Fed is saying it's not, because it's transitory. And I think come late August, early September, if we're still getting inflation numbers, like this, above 5%, above 3%, I think the market might begin to call the Fed's bluff, or I mean, they probably already are right now, but I don't think they'll believe the whole transitory story there anytime soon. But again, that's what's going on the equity side. A lot of action really on the crypto side. When we began the week, actually, Bitcoin was in danger of breaking below 30K. Actually, we were trading below 30K. We hit lows of 28,800. And I was saying, hey, look, guys, this is a major support level, 30,000, right? You can see here it's held support a few times here in January, and you have 1, 2, 3, and now a fourth touch here. So when you see these type of wicks, right, that's indicating there's a lot of buyers stepping in. And as a technical guy, I like to wait for the actual closes on the candles, like to confirm that, okay, the breakouts happen. And as you can see, we did not get that close. Instead, we got the buyers stepping in, and they actually managed to have a green close, or get a green close on Bitcoin, just indicating how strong the buyers are at this level. We got a bit of a bounce. Maybe this is just a bit of a dead cat bounce, because as you can see here, today, it is a pretty red day right now. We're giving up basically 3 days worth of gains here almost. Well, 2 days for sure, maybe 3, depending on how this candle closes a bit later today. So this 30K level is still, I think, we're not safe just yet. We could still see a break here. And look what's happening here in Ethereum. We actually did break below 2,000. We pulled back up to retest this major support zone of now it's resistance, right? Price ceiling of 2,000. And we're seeing sellers step in here, rejecting the $2,000 level there. So I would say just be a bit cautious here on Bitcoin, but this 30K level is still very strong support, and we have been just ranging here for maybe a month now. And I'm going to look at the 4-hour charts, and if you guys are part of our Discord chat, I'll let you know if I see some sort of basing. But right now, I think just be a bit careful here in cryptos. If you're someone like Cathie Wood, though, if you're someone that believes in the longer term future for cryptos, you might be looking at these prices to accumulate. Of course, there's a difference between investing and trading. As a trade, I might not trade this just yet, but hey, if you're holding for a few months or years, then sure, maybe you can add some position here. And that's what Cathie Wood did here. She actually ended up buying, and this is priced for the 22nd of June, so just 3 days ago, but added up how many more shares. She ended up buying 214,718 shares of Coinbase. So now Cathie Wood and ARK hold 4.7 million shares of Coinbase. And when I calculated it, it does come to about $1 billion position. So let's take a look quickly here at Coin. And Coin should be also basing here. So maybe what we call a double bottom here. But I mean, it could still make new record lows, right?
I think it's actually heading more record lows.
More record lows? Okay.
Yeah, the thing is that Cathie Wood right now is not really being an industry leader. She's basically covering her ass. She did this. Yeah. Not buying the dip. She did this in an effort to actually, as far as I'm concerned, to boost public sentiment in order that the people that don't know anything are just going to go, well, Cathie's buying, and this is awesome. We got to get out there and do this. Because in a certain sense, it's not necessarily considering her market cap, not a or the size of her fund, not a huge splash. Right, this was a relatively sizable investment, but something really just to indicate sentiment. And also this idea that she's buying into Tesla because it's such a great deal. She bought into Tesla because Panasonic sold out.
Right. I think I think they just sold out everything today.
They did. It was $3.6 billion they dropped. They didn't want anything to do with it, which is a really good indication that perhaps they don't think Tesla has any staying power at the market cap it currently has. And it shouldn't, because basically it's getting its ass handed to it in Europe. For it to actually maintain the market cap that it has right now, it has to be market dominant across the fucking globe. And it can't be, and it won't be. There are many competitors building up steam. Volkswagen, as I said, has it beaten hands down, 900,000 units compared to 100,000. The car itself is actually better made. There's so many stories of Teslas getting into the fucking dealership parking lot and actually being pulled apart by the people that bought it. Pulling parts off the dash, pulling the steering wheel apart. I mean, these are not well-made cars. Consumer Reports are slamming them left, right, and center. And currently, Musk is not actually delivering as a normal car manufacturer. He's hopping from one fad to the next in a hope of actually bullshitting his base into thinking that there's actual progress. He released the Plaid model as a I guess you could say. He released the Plaid model in place of actually sending out cars that he was supposed to sell. He had $20,000 units in containment hold because they couldn't finish the car build, so he could get out the Plaid model, so he could get a flash in the pan in marketing. And he says he doesn't have a PR department. He sure is buying a lot of time with journalists.
I just found this right now, though, dude. Galen, remember privately
Oh,
we
I
were
know. We
discussing
were talking
about
about the
Shiba,
Shino, and he
Shiba
decided
Inu.
he decided to
Yeah.
jump on that wagon, which is really kind of interesting because he's all over the place. He has no concerted vision. Everything he does is more or less just to grab some attention, right?
You know what I'm
So,
hoping happens here is
mm,
he I don't know when Jeff Bezos is supposed to leave the planet. I think
20th
it's
of
like
July.
hopefully soon.
20
July
I
20th.
hope Elon buys some insurance or something and makes the same choice. I hope this drives him to put
Yeah,
his money where his mouth is for the first time. Was like
absolutely.
you said, he's not delivering anywhere else, even the cars.
No,
Hopefully, he goes to space soon.
exactly. And the funny thing is, this whole idea of the Plaid Plus isn't important. We're not going to ship that vehicle. You know why he didn't ship that vehicle? It wasn't because he just didn't think it was important. They haven't finished that fucking tabless battery yet. Like he said it was going to be done ages ago. So he's missing everything that he's talking about, right? And that is not a sign of a good executive. That's a sign of a rainmaker and somebody that doesn't necessarily just believe in vision, somebody who's just stringing you along to take your money. And Kathy Wood is no better than that. I'm sorry, I don't see her as a visionary. I see her as someone that got very lucky on a market that had nothing to do with productivity, but merely had, she, I guess, had vision in the sense of catching the fad. But as far as a long-term investment, buying into Coinbase, who says Coinbase is going to last in the next 2 years?
That's true. You know, it's funny. She went from, wait, what you're talking about, Galen, her size. She went from 3 billion in 2019
Yep.
in assets under management to 50 billion.
Yep.
Just last quarter. I don't know what it is now since she's updated,
Yep.
but around
Right.
50 billion. So her bets now, her universe is way smaller now.
Mm-hmm.
And she can, and if she continues to do this strategy of hers, where she takes a couple basis points on each position,
right,
it doesn't really add to the performance in the long term.
Yeah,
it's more difficult for her now to perform well with the cash she has, especially because some of her positions are pretty concentrated in thinly traded stuff.
I have to say too, like she, I mean, you get a lot of these updates, her latest trades every days, like every few days. So she trades a lot, which is a bit, it's not something you see with a lot of hedge fund or managers, right? They don't really make many trades a day, but she seems like she just,
which is another sign that she's not doing something that's long-term value. She's racing. She's racing to find the dollar.
I think it's weird. I think at this point, she kind of has to be aware that her performance is gonna lag for the next few years.
She's never gonna get
with
that
her size
bounce again. Ever.
Like innovation, innovation is such a niche that $50 billion kind of captures the whole.
That's it.
The whole. It's like I don't know where she'll go from now.
Right.
But like I was saying, she's gonna probably become more active.
Mm-hmm.
And I might, this stat might be wrong, but each quarter she turns over more than 100% of her portfolio. So like Tesla and them don't change that much, but there are all these other little positions at the bottom that are constantly being switched in and out, switched in and out, switched in and out. That's so weird. The costs have to be building up with something.
Yeah, totally. I think she's hoping for another run, TK. I think she's hoping for another run. Do you know what I mean? Like that's the only reason why she got this $50 billion boost in the first place was external forces. It wasn't wise investment. It was lucky investment, right? And I'm not trying to discount, her accomplishments or her skills. I'm just trying to call it for what it is. Right? It wasn't that she was being smart. It was that she got in at exactly the right time, and it was luck. Now, good for her, but you can't run on luck forever.
Kind of, the situation, not as close, but reminds me of long-term management capital. But these guys were a bunch of genius economists. Economists have a bad history in the market. But they were based off some innovative algorithmic trading. And they were finding these inefficiencies and they were making these heavy bets with a lot of leverage. It was embedded leverage. So weren't taking loans. They were just taking these weird trades and stuff like that. And they grew kind of similar to Kathy Wood, because they were because they noticed after a while they had to invest in the high flyers. So they got into, at the time, the high flyers was Cisco, IMDb, Xerox. Those were the high flyers at the time. And then they crashed because they were buying those when people had already kind of priced in most of the growth. They were overpaying for growth. And it kind of reminds me of what ARK is doing, except I don't know how leveraged they are, because I haven't really looked into that. And as long as that kind of continues, I think a company like Tesla will do well until that reverses on them. And then he has a shortage of cash, because generally the company doesn't bring in that much cash for him to do what he does. He won't be able to issue stock or issue bonds at a favorable rate and stuff like that. So it's like, it's a ticking time bomb.
So she also bought QBTC. Yep. Yeah. So she also bought QBTC, the Bitcoin fund. Is that the right one? Sorry, GBTC. QBTC is the Bitcoin fund here in Canada. GBTC is the one in the States, Grayscale Bitcoin Trust. And, we got to ask Joseph, man, would you say some of her buys here are prudent? Are you in the camp that she's looking at the longer term here, and it's probably a good idea to pick up some of the assets here if you believe in crypto's long-term future?
I would actually agree with her. If you're going to get into, okay, all right, I should probably explain myself. Now, if you look at the overall arc and the way a lot of these past few rises and falls for Bitcoin come and go, you'll see they usually come in at a new resistance or a new stabilization point after a while. Like you'll notice with a lot of these companies, they have a more like a lesser arc, and then the bulls start running, and then they usually stop at a higher point. And I think we're going to start seeing that with a lot of these cryptocurrency related companies. Now, this actually ties into I suppose a lot of what I'm actually doing with my own trading is that I'm more or less waiting for the dust to settle with this China thing before I decide what I'm going to do next.
Yeah,
because that's what I think is causing this market depression right now.
Yeah. What would you say in terms of holding, say, altcoins versus the major big boys? Would you say it's maybe prudent to take profits in altcoins right now, and maybe for buy, if you were going to buy, would it be safer to buy some of the bigger boys?
I would say it is probably not a safe bet to stay in the decentralized cryptocurrency right now. You might actually want to suggest take your profits, of course, but take your normal investment and put it in a stable coin, like like QCAD or USDC. I always avoid Tether because I hate Tether, and just let it sit there until all the miners get set up in Texas or wherever they're going. Then we'll start seeing the prices start to change when the hash rate starts to pick up again.
Now it's interesting that the Shiba, we talked about that very briefly, and Shiba Inu, and I don't know if I'm pronouncing it correctly or not, but Musk has suddenly jumped on that bandwagon, and I'm sure he has no idea why. He just did. I did take a look at this coin very briefly because a friend of mine had invested in it, and they're a very thoughtful individual and had considered this to be unique in the cryptocurrency world. Whereas all the cryptocurrency that we see, and I'm being very general right now, so I could be absolutely wrong, but let's say with all the cryptocurrency that I've seen to this day, it's all been about trading the asset and increasing its value that way through just the FOMO. What Shibu does is it actually eliminates coins off the table on a regular basis. And so you, as a buyer, you have the option of what they call to bury your assets, right? And that removes it from this generalized pool and becomes a saving thing for you, right? It's still considered to be part of the currency outlay, and they're in their numbers, but it doesn't get removed every time they destroy coins. However, if you don't bury your coins, you stand the risk of losing them, I guess. That's what it does. So this is meant to encourage investment rather than trading. And I think this is a very interesting concept because it is so opposite of how all the cryptocurrencies operate right now. They're all assets that people want to just get off their hands as quickly as possible or in their arms as quickly as possible because that may be worth $1 billion tomorrow. Now, what Musk has said has actually caused the value of this to skyrocket. So my friend's probably sitting very pretty right about now in regards to how much they own because they bought about $1,000 worth. And it was at 0.0007 cents. Actually, I think there were more zeros in that. So it's probably done them a bit of a favor. And mostly, he has a philosophy, this friend of mine, which I think is actually quite prudent in this particular market. If you're going to drop dollars, find the coins that are worth next to nothing. The ones that might have some, that will actually give you some gain if they go a couple of cents or if they go a fraction of a cent. Those are the ones that if you want to drop money and only drop what you can afford to lose, please do not borrow. Not like the 43% of UK residents who are invested in Bitcoin who actually went and got loans. No. Right? That is an incredibly tenuous way to invest.
Most crypto folks tend to come and eventually arrive at the conclusion that they actually want to buy the coin that is 0.0001 because it goes to 0.005 and suddenly they're in the money. But the problem is with 5,000 or 6,000 coins being invented every day, it's awfully hard to sift through the crap to find the diamond. And there aren't any independent metrics which will actually teach you that. That's why people stick to, they don't go chasing waterfalls, to quote TLC.
No, absolutely. And I love the quote. But I think the reason being for that is just the general ideology of the sector itself is that it is a lottery. And Bitcoin has already been a winner for too long, so it has really no place to go to a certain extent. So it can't really be a winner anymore. A friend of mine, as I said, bought into it knowing that it was a purely speculative investment. Right. He was interested in the coin itself because of the philosophy and that it was so different from everything that he'd encountered before. But he knew going in that $1,000 was something he could just kiss goodbye and not worry about, and that the rate and value of the coin was something that was just, he could buy a lot of it. And so if it did strike, because that's basically how he looked at it, if it does strike, I'm good. If it doesn't, right? But I think that is probably the reason why that is. There are no metrics. You're right, Joseph, but I think there are no metrics for a very good reason, because there's no metrics.
Well, yes, there's no metrics, but there's usually a white paper printed somewhere on the internet, and it's a matter of, I don't know, how much external research do you want to do on learning the essentials of cryptography to be able to determine what is and is not the correct coin. I mean, that could be very lucrative, very lucrative if you can get it down, but a lot of people aren't willing to do that.
Well, I don't know, and it's a good point, Joseph. We should always be doing due diligence, absolutely. But for me, I don't know if there's any due diligence that can be done on these, white paper or not. All of the stuff that they offer has no functionality for the most part in the real world, right? Still it hasn't. Nobody can offer something that's going to do something and produce something on a regular basis that can be relied upon. It's all about, well, we're going to do it so it's a proof of work, and you're going to be assured that it's not going to be centralized in this way. But really, the value of whatever they're trying to hawk to you is only valued because a bunch of people are buying it.
I find this interesting, the Shiba token, just because if you guys remember, maybe it's been a few months or a few weeks, I can't remember, but we were talking about the interest or the eventual move into decentralized finance tokens. And I still think that's where the big moves are going to be. And, Shiba token is a DeFi token, right? So maybe we're seeing the beginning of that, where people are now realizing if those regulations come on, say, Bitcoin and stuff, they sort of become centralized in a way. So I find this interesting, and maybe it's on the path towards that move into DeFi there. So we'll keep an eye on this. Any closing remarks on the crypto stuff? We can just quickly touch here on infrastructure, but I know TK, actually, no, you have something here.
I'm going to have to hold this one whilst I do this. I found this pretty funny. And I'm sure you can read it. It says Lehman Brothers loses 60 billion in market cap in a few weeks. Greatest financial disaster ever. People were in a panic. Dogecoin loses 72 billion in a few weeks. Crypto is the future, bro. This is totally normal.
No. That's hyperbole. You see, everyone who's paying attention to this stuff knew Dogecoin was a piece of crap. Seriously. I mean, I wrote a story about a company who, like, they started this whole Dogecoin thing, and I'm like, what are you doing? Learn to read the room, dude. This is a fad. You're going to just lose money off of this.
That's true. It's a tale of the time. I actually have a thing with that, a story before I get into this Ray Dalio thing quickly. But there's a guy, he was an analyst from the 1970s, and he was talking about 10 baggers and 100 baggers and stuff like that. And he mentioned it's very difficult for a lot of people to do that. Yep. Because investors are like fish. If a fish sees like a thing, in a pond or whatever, and what the fish reasons is, last time my food was moving, this thing is moving, so it must be good. And investors reason the same thing a lot of the time. Last time when I bought something, it was moving. This thing is moving, so it must be good. And it's the complete opposite way of building wealth. You destroy more wealth in that way than you do buying low. But I was watching an interview by Ray Dalio, and he's a big hedge fund manager, and he was just comparing the bubbles. He was asking, what is a bubble? How do people define bubbles? Are bubbles different from just general bull market? Can there be a total market bubble, or just a centralized bubble? How do you go through a checklist to see what is a bubble, etc.? He was asking those questions, and he said he goes through 6 filters. Basically, he looks at how high prices are relative to traditional measures. And if he goes through the same process for each apparent bubble that's there. And he goes through how people discounting the future, people overpaying for growth. So the Teslas, etc. And our new buyers coming into the market. I think the Robinhood and GameStop thing kind of tells its own story. And is there a broad bullish sentiment, which is different from new buyers coming in? This means the institutional guys are pretty bullish, because since they're the whales, they're ones who move the poker table. And purchases are being financed by high leverage. So this one was the interesting. He said a certain amount of leverage is okay. It's okay to be 10 up compared to your equity. But it gets weird when you're now 20, 30, 40, 50. Lehman Brothers was 60 times levered up during that market downturn. So he's saying as of today, we're still it's frothy. We're not too sure if a lot of the market is levered up. And he said buyers have made extended forward purchases. This could be both us, individual buyers, buying futures for stock prices that are just buying options for futures prices that are just out of this world, or companies overextending their inventory and overbuying their budgets and etc. And he goes through each bubble, but I won't go through everything. But it's today's one that I found interesting. Yeah. So he has the total market. So I think it had 3,000 companies in the US, and then he had the emerging tech, and this he put everybody else we've talked about basically today, and a bit more. And he said, relative to history, so the dot-com bubble and the one that, or the 1920s that people are saying we're more similar to, we might not be in a total market bubble, but there are sections in the economy that are showcasing bubble-like behavior. But because of how low interest rates are, and zero interest rates, and massive printing, and the shutdown of the economy, etc., it's hard to tell if we're at full productivity. It's the only way to tell if you're in a bubble is if you have a clear presentation of where full productivity is in any economy. And I just found it an interesting view. I don't agree with it all, but who am I? He's a hedge fund manager who manages hundreds of billions of dollars. So he's obviously doing something right. But I just found this pretty interesting because he's basically saying you can still buy stuff right now and not be affected by the overall bubble or market. And he says if you spend 15 minutes of your year analyzing where the market is going to go, you've wasted 10 minutes of your year.
Yeah. I mean, like, to be honest, like, we've been talking about this too, right? Like, these markets, in my opinion, I think if you look at where things are going to go, there's nowhere else to go to park your cash. So I think, there's going to be, some people might call it a parabolic move higher, or some people might be calling it a blow off top. But I still think that's the game, right? The markets are going to move higher because there's really nowhere to go. And now, you're hearing analysts talking about, the reopening play, when, we were talking about reopening maybe back here, but now we're talking about reopening plays when markets are already making new highs and how that's a catalyst for stocks to go forward. And I think that's, this environment, right? If you're looking at the baby boomers who have to retire in the next few years here, they need these markets to be higher, right? That's the new place to go now. You can't really put money in bonds. Real estate, sure you can, but even $1 million in real estate, sometimes in some places you still require a mortgage. So stocks are really the only place to go for yield. Maybe cryptos too, right? Maybe that's something, but right now more people would probably prefer stocks, it seems, or especially the older generations. So I mean, like, yeah, I tend to agree, with Dalio in terms of, yes, things are crazy, but where else are you going to go, right? Until that sort of black swan event occurs, or the Fed maybe starts to hike interest rates, right? Because then maybe that money will go into bonds instead. But really, there's no outlet, right? You have to be in stocks going forward, and the Fed is pretty much letting you know that there's that Powell put, right, as some people like to call it.
Well, there you go.
That's true. I think it's weird. I'll say, I think it's a weird time to be in where the Fed is telling us potentially in 2 years they might do a few basis point hikes or whatever they want to call it now. But these guys will let you borrow money from them at whatever the rate is today on the long-term 10-year, like 1 point something percent.
0.5%.
And they will print excessively, reducing your purchasing power by like 2% over that time. And it's like going to buy, fire insurance from the company that's actually creating the fire.
Yeah, exactly.
It's weird. I don't want to make that bet. So yeah, it's just a weird time to kind of be especially people who are coming close to retirement. I think it's
right.
It's pretty telling. A lot of people are getting into annuities now as well. Coming back into annuities because interest rates bumped up a little more. So you can kind of tell people are trying to look for yield wherever it is. But it was just telling don't even waste time trying to figure out what's going to happen. Just continue to look for things that you think are attractively priced. And I was like, that's a pretty ballsy thing to say for someone who's an ETF guy.
Exactly.
Well, on that note, as we're running out of time, I just want to say thank you very much, TK, Joseph, Vishal, and thank you guys for listening to the show. We're going to be back next week along with Maddie. And we'll just take it from there. Try not to slit your wrists. It may not be the end of the world, but sure looks pretty crazy, man. All right. Well, thank you very much. We're going to head out of here. Take care.